Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel Accounting Buddy. Today's video of part 3 of chapter 6, Accounting Procedures, Rules of Debit and Credit, is full of practical examples and illustrations to learn and strengthen your knowledge for the rules of debit and credit, the very foundation of double entry accounting system. We will cover 11 topics followed by Q&A section. Therefore, sit back, relax, and watch the full video. Let us have a quick recap of the rules of debit and credit under modern classification of accounts. Assets are debited when there is an increase, while the assets are credited when there is a decrease. Liability accounts are debited when they decrease, and the liability accounts are credited when they increase. Capital accounts are debited when they decrease, and capital accounts are credited when they increase. Revenue accounts are debited when they decrease, and the revenue accounts are credited when they increase. Expense accounts are debited when they increase, and expense accounts are credited when they decrease. Therefore, we can conclude that liability accounts, capital accounts, and revenue accounts are debited when they decrease, and these accounts are credited when they increase. While asset accounts and expense accounts are debited when these accounts increase, and they are credited when they decrease. Let us test our understanding with an illustration. Mention the nature of the account and which side will increase if the transaction is recorded. First account is building. Building is an asset and they are debited when increase. Second account is rent. Rent is an expense account and expense account are debited when they increase. Third account is sales. Sales is a revenue account and the revenue accounts are credited when they increase. Fourth account is creditor. Creditor is a liability account and liability accounts are credited when they increase. Fifth account is proprietor. Proprietor account is a capital account and the capital account are credited when they increase. Sixth account is stock. Stock is an asset account and assets are debited when they increase. Seventh account is interest paid. Interest paid is an expense account. Expense accounts are debited when they increase. Therefore, asset and expense accounts are debited when they increase, while the revenue and the liability and the capital accounts are credited when they increase. Let us further practice debit and credit rules with another example. Basis the modern classification of accounts, analyze the below business transactions, state the nature of accounts, and also state which account will be debited and which account will be credited. Transaction T1 is Tolly started business with cash of $50,000. Now when we analyze T1 transaction, the two accounts which are affected are cash and capital. Cash is an asset account and capital is a capital account. Since the cash being an asset is increasing, cash account will be debited with $50,000 and capital being the amount business owes to the owners will also increasing will be credited by $50,000. T2 transaction is goods worth $18,000 are purchased by cash. If we analyze T2 transaction, the two accounts which are affected are stock account and the cash account. Both stock account and cash account are asset accounts. Since stock being an asset is increasing, therefore it will be debited with $18,000. Now since the transaction of purchase of goods is settled by cash, the cash balance with the business is decreased, therefore the cash account will be credited. Transaction T3 is goods worth $8,000 are sold to Polly. Now when we analyze this T3 transaction, the two accounts which are getting affected are Polly's account and sales account. Polly's account is a debtor account as the goods are sold on credit. Now Polly's debtor account is an asset account while the sales is a revenue account. In this transaction, asset account is increasing. Therefore, Polly's debtor account will be debited with $8,000. Now in this transaction, sales is also increasing. As per the revenue account rule, sales will be credited with $88,000. Transaction T4 is furniture worth $4,000 purchased from Homebox. Two accounts involved in T4 transaction are furniture account and Homebox creditor account. Furniture is an asset while Homebox is a liability account. Asset value is increasing, therefore as per asset rule, the furniture account will be debited by $4,000. The value of liability is also increasing, therefore as per the liability rule, Homebox creditor account will be credited by $4,000. The transaction T4 is an amount of $10,000 is borrowed by business from Maya. In this T5 transaction, the two accounts affected are cash account and the loan from Maya account. Cash is an asset account while the loan from Maya is a liability account. Asset value is increasing. Therefore, as per asset rule, the cash account will be debited by $10,000. Liability account is also increasing. Therefore, as per liability account rule, the loan from Maya account will be credited with $10,000. Let us now learn about the balancing an account. At the end of the period, say a day, week, month, or a year, it might be necessary to know the balance of an account. A balance of an account is the difference between the total of all the transactions recorded on the debit side and the total of all the transactions recorded on its credit side. If the total of the debit side transactions is more than the total of the credit side transactions, the account is said to have a debit balance. And if the total of the credit side transactions is more than the total of debit side transactions, the account is said to have a credit balance. At the end of each period, total both the credit and the debit sides of the account. Find the difference between the two sides of the account. Allocate the difference amount on the side which has a shortage. Now the total of both the sides will match. Close the account and record the date of closure. If the credit side is shorter than the balance amount, that is the excess of total debits minus total credits, will be entered on the credit side by writing to balance carried forward with date. The balance is carried forward by writing by balance brought down on the debit side of the account on immediate next date to the balance carried down date, it being the debit balance. Now if the debit side is shorter, the balance amount, that is the excess of the total credits minus total debits, will be entered on the debit side by writing to balance carried down with date. The balance amount is carried forward by writing by balance brought down on the credit side of the account on immediate next date to the balance carried down date, it being the credit balance. The CD stands for carried down and BD stands for brought down. Let us understand the concept of balancing of an account with an illustration of a cash account for the period 1st April 24 to 30th April 24. Cash being an asset account will be debited when increase and will be credited when decrease. The left hand side of a account is debit side and is denoted by the letter DR, and the right hand side of the account is credit side and is denoted by the letter CR. Left hand side of the cash account, which is debit side, has an opening balance of 50,000. All the transactions which result into increase in the cash balance are recorded on the left hand side of the cash account. In this example, the transactions which increases the cash of the business are cash sales of goods 75,000, collection from debtors 80,000, commission received 20,000, Advance received from the customer 15,000. Cash received from the sale of old delivery vehicle 40,000 and the capital contributed by the owner 100,000. And on the right hand side of the cash account, all the cash transactions which results into the decrease in the cash balance are recorded. Staff salary 80,000, office rent 40,000, cash purchases 50,000, payment to creditors 60,000, withdrawal by the owner 20,000 and cash deposited into the bank 75,000. In this cash account example, when from the total cash of 380,000, all the payments of the cash are deducted, we are left with a cash balance of 55,000. Since in this cash account example, credit side is shorter than the debit side, the excess of the total debits of 380,000 minus total credits, the difference amounting to 55,000 shall be entered on the credit side of the cash account by writing by balance carried down with date. This carried down balance of 55,000 is carried forward to the immediate next date, which in this example is 1st of May 24, by writing to balance brought down. Cash account shows a closing balance in hand of 55,000 as on 30th April 23, and it also shows the brought down balance of 55,000 as on 1st of May 24. I sincerely hope we have understood with this example the concept of balancing of an account and the terms balance carried down and the balance brought down and their relevance. Important facts which you should always remember for balancing an account are: only personal and real accounts are balanced. Nominal accounts are not balanced. Nominal accounts are totaled and are closed by transferring them to profit and loss account. Balances in the asset, liability and capital account are transferred to the balance sheet. The personal and real accounts are balanced and their balances are carried forward to the next financial year. Let us learn the significance of debit and credit balance in accounts. Credit balance in capital account means the amount due to the owner of the business. Credit balance in bank account, supplier account or other similar accounts means the amount payable by the business. They are the liabilities of the business. Debit balance in cash account means the cash in hand. Balance in bank account means the cash at bank. Balance in debtors account means the amount receivable against sales. Balance in building account, furniture account means the value of the assets owned by the business. Credit balance in sales account, interest received account, discount received account, etc. means the income earned by the business. Debit balance in rent account, salary account, interest paid account, etc. means the expenses incurred by the business. An account with debit balance is either an asset account or an expense account. An account with credit balance is either an income account or a liability account or a capital account. Let us discuss another illustration. Prepare a T-shaped account of furniture with the below transactions. Since the furniture is an asset account, we know the rules of debit and credit for asset accounts. Asset accounts are debited when there is an increase in the asset value, and asset accounts are credited when there is a decrease in the asset value. The value of furniture already with the business is worth 50,000. Therefore, it is shown in the furniture account as opening balance as on 1st of April 24. Transaction T1 is on 15th of April 24, 14 tables and 14 chairs are purchased for cash amounting to 20,000. Now with this furniture purchase transaction, value of assets, that is furniture, will increase, and as per asset account rule, this transaction will be recorded on the left hand side, that is the debit side of the furniture account. Transaction 2 is on 30th of April 24, 25 chairs for the conference room are purchased for 75,000. This transaction of 75,000 will also be recorded on the left hand side, that is the debit side of the furniture account. T3 transaction is old chair and tables costing 15,000 were sold on 15th of June 24. With this transaction, the value of the assets, that is the furniture, will decrease by 15,000, and therefore, as per asset account rule, this transaction will be recorded on the right hand side, that is the credit side of the furniture account. Transaction T4 is broken furniture worth 2000 was discarded by the business. This transaction will also result into decrease in the value of the asset, that is furniture. Therefore, it will be recorded on the right hand side, that is the credit side of the furniture account. Transaction T5 is an amount of 5000 is charged as depreciation. The depreciation amount charged will reduce the value of the asset. Therefore, it will be recorded on the right hand side, that is the credit side of the furniture account. Let us now balance the furniture account. The total of left hand side, that is the debit side of the furniture account, is 145,000. Now if we deduct the lesser credit side transactions from the total of debit side transactions of 145,000, we will left with a closing balance of 123,000 as on 30th June 24, and is represented as by balance carried down. Now, when you add all the credit side transactions, including the balance carried down, you will get 145,000. Thus, the account is said to be balanced as on 30th June 24. Now, the same amount will be shown as balance brought down on immediate next date, that is 1st of July 24. Let us now try and prepare a creditor account of Mr. Polly by considering the following transactions. A creditor is a liability of the business. Liability by nature have a credit balance. Therefore, in this illustration, the opening balance as on 1st of April 24 in Mr. Polly's account is 12,500. Transaction T1 is business purchased 500 kg of sugar worth 125,000 on credit from Mr. Polly. Now with this transaction, the liability of the business will increase as an amount of 125,000 is payable to Mr. Polly. As per liability account rule, liability account will be credited when liability increases. Therefore, the transaction of 125,000 will be recorded on the left hand side, that is the credit side of Mr. Polly's account. Transaction T2 is on 30th April 24, an amount of 100,000 cash is paid to Mr. Polly against an outstanding payable amount. With this payment of 100,000 to Mr. Polly, the outstanding balance of Mr. Polly will be reduced by 100,000, and thus the liability of the business will also get reduced by 100,000. As per liability account rule, the liability account will be debited when the liability reduces. Therefore, this transaction of 100,000 will be recorded on the right hand side, that is the debit side of Mr. Polly's account. Transaction T3 is on 15th of June 24, 50 kg of sugar was returned to Mr. Polly. The cost of the sugar returned is 12,500. Since the sugar was 12,500 is returned to Mr. Polly, this amount is no more payable to him. Therefore, his outstanding balance will get reduced by 12,500. As per liability account rule, the liability account is debited when they reduces. Thus, Mr. Polly's account will be debited by 12,500. T4 transaction is on 30th June 24. Again, 300 kg of sugar worth 75,000 was purchased. With this transaction, the liability of the business will increase. Therefore, Mr. Pauly's account will be credited by 75,000. T5 transaction is a discount of 5,000 is received from Mr. Pauly. The amount of discount given by Mr. Pauly will reduce the liability of the business. Therefore, Mr. Pauly's account will be debited by 5,000. Now, in this creditor account illustration, the credit side of the account is greater than the debit side. The total of credit side of the account comes to 212,500. When the total of the debit side transactions is deducted from the credit side total of 212,500, we will get the balance carried down 95,000 as on 30th June 24. The debit side total will also be 212,500 and thus the account will be balanced. The balance carried down as on 30th June 24 will become the balance brought down as on 1st of July 24. Let us take a few questions related to the fundamental rules of debit and credit. Question number 1 on your screens is, why is revenue credited when earned? The answer is because it increases the owner's equity. Question number 2, which side of a T account shows credits? The answer is right hand side. Question number 3, why is an expense debited when incurred? The answer is because it decreases the owner's equity. Question number 4, what is the rule for recording drawings? The answer is drawings are debited because they reduces equity. Question number 5, are purchases recorded as debit or credit? The answer is purchases are debited as they increase the expense or the assets. Let us now try and answer few critical thinking questions. Question number 6 on your screens is, profit earned by the business and increase in proprietor's capital. Is it correct? The answer is yes, it is correct. The profit earned by the business is added to the capital of the proprietor. Question number 7. A liability is paid by issuing a check. Which account will be credited and why? The answer is bank account will be credited. When payment is made by check, bank balance will be reduced. Bank is an asset account and as per rule of asset account is credited when it is reduced. Question number 8. Why the rules of debit and credit are same for liabilities and capital? The answer is rules of debit and credit are same for liabilities and capital account because of the business entity concept. As per this concept, the business is separate and distinct entity from its owners. Let us take up few one-liner answer questions. Question number 9 on your screens is, what is signified by a debit cash balance? The answer is a debit cash balance signifies cash in hand. Question number 10, what is signified by the debit bank balance? The answer is a debit bank balance signifies amount of money lying with the bank. Question number 11, is capital a personal account or a real account? The answer is capital is a personal account as it represents the owners of the business. Question number 12, what is signified by the credit bank balance? The answer is it signifies the amount business owes to the bank. Question number 13, cash withdrawn by the proprietor should be credited to which account? The answer is it will be credited to the cash account. In my upcoming video of part 4 in the series of the accounting procedures, rules of debit and credit, we will cover 100 plus questions and answers under 9 categories as displayed on your screens. Yes, you heard it right, 100 plus questions and answers covering all the aspects of the rules of debit and credit. This revision video will make you exam ready for the topic of rules of debit and credit. If you enjoy the content of my channel and appreciate my teaching style, please like, comment, subscribe and share my YouTube channel Accounting Buddy. Don't forget to hit the bell icon so you never miss an update. Thank you and goodbye for now.